Hello, folks. We are going to get started here in just a moment. Please bear with us. Thanks very much. We'll get started here in just a moment. Thanks for joining. Hello, folks. We're just waiting for a few more folks to join. It's about 9:04. We're going to get started in about 1 minute. Okay, 1 minute and we'll get started. Thanks very much, everyone. Okay, everybody, we are going to go ahead and get started here. Thanks for joining us. Good morning. My name is Anthony Bruno. I am the Royalty Exchange Director of Communications, and I'm going to be sort of your host, I guess, for this webinar or this meeting. In a moment, I'm going to go ahead and bring in Matt and Ryan to get started. But first, I wanted to share a few quick housekeeping items. First of all, I want you all to know this is our first open office hours session. We decided to do this because we know that there's a lot of investors that probably have a lot of questions right now. So we're going to be holding these weekly for the foreseeable future. And like most things today, this is a remote meeting being held via Zoom. So please bear with us if there's any platform or tech hiccups along the way. We do have some slides that we're going to attempt to share here a little bit later on, but if we have some problems with that, you know, we apologize. But basically, this is mostly just an opportunity for us to answer some of your questions. So with that, we're gonna go ahead and kind of get started here. I want you to know there is a Q&A feature at the bottom of your screen. You'll see Q&A. If you select that, you'll be able to submit questions, and myself and Matt and Ryan will be able to see these, and we'll answer them as we go along, basically. And some of you also submitted questions in advance, which we thank you for. We will probably start with those questions first, kind of address the questions that were submitted to us in advance, and then we'll get to the ones that were actually sent in. So I'm going to go ahead and start my video here, and I'm going to ask Matt and Ryan to please join in if you could. There's Matthew, and there's Ryan. All right, we're all here. Quick audio check. You guys are unmuted and ready to talk? That's interesting. We're going to work on this as we go along here, it seems like.
All right, there we go.
There you go.
And good. Hi, thanks for joining us.
There we go. There we go. All right, tech issue number 1 out of the way. So, and I'm going to attempt to share my screen now as well. I was having some problems with that. So please bear with me as I get that up and running. And I think we are working. Matt, do you want to go ahead and kind of get us started?
Sure. Because there's a lot of diversity among the people that are on this video conference right now, and among the questions we got. So we just want to take a couple minutes and do a little overview, like literally 3 minutes long, about Royalty Exchange, explain some fundamental pieces of the business and how royalties work, and then we'll get right to your questions. So Make sure you ask questions along the way. As they come up, go ahead and submit them, and we will get to them, as soon as we can. I mean, our primary goal is to make sure that any questions you guys have get answered today. So please ask them, and we'll take care of that. So a little bit about Royalty Exchange. Essentially, what we are is we're a marketplace for music royalties. So mostly we work with songwriters, although not exclusively, who have legal claim on income through royalties. And they, in order to sort of generate cash or sort of monetize the royalties, they make them available to investors on our platform. What we do is we just sort of match these two parties together. We don't buy the royalties ourselves, although I do personally own some. Royalty Exchange does not buy them. Instead, we're just the marketplace where we bring these two parties together. That's how it works. So far, the average investor ROI that we've seen for all the royalties that on an annual basis, the royalties that we administer on behalf of our clients is a little over 12%. We've done about $74 million in transactions so far. There's more than 27,000 investors registered on the platform, and we've done, I don't know, something, well, certainly north of 800 deals so far. That's Royalty Exchange. So what royalties are, just for those, it might be some people who don't really understand it. Essentially, if people who have created intellectual property, specifically in this case, we're talking about music, but they've created intellectual property, every time that music is used, the music user has to pay a fee for that. Now, that can be done through, through subscriptions fees paid to Spotify or something like that. It can be done by a radio station who pays a broad licensing fee to certain entities, which we can talk about later, who then collect royalties and distribute those royalties ultimately to the royalty owner, to the person who created the intellectual property. The thing about investing in music royalties as opposed to equities in general, or companies in general, is that you get a piece of the top rather than getting rather than having to wait until the profits are ultimately generated by a business, like going through all the overhead and expense associated with running a business. Royalties are unique because essentially it comes right off of the top. When we think about it, like if you were investing in real estate, if you got paid a percentage of the gross rent paid instead of having to pay, the utilities and property maintenance and the capital costs of the property along the way, royalties are a cut on the top, and so it's a more stable position to be essentially in the capital stack. So that's why we love royalties. Now, music royalties in particular, are broken down fundamentally into two parts. Two totally different copyrights that essentially the royalties derive from. One is the recording, and that's the music we actually hear, and then the other one is the composition. So, as an example, sometimes, use the Bob Dylan example here, Knocking on Heaven's Door was written by Bob Dylan, but it wasn't actually the most popular version of the recording of that was not Bob Dylan's. Sort of Eric Clapton's and even Guns N' Roses were both more popular. So when Eric Clapton's version of Knocking on Heaven's Door is played, Bob Dylan still earns a royalty on it as the writer. And then Eric Clapton earns a royalty on it as the artist for the recording. So essentially there are two different claims, the copyright claims. One is on the writing side of it, the composition side, and the other is on the actual sound recording. For the most part, on Royalty Exchange, we work on the composition side of things. So in the composition side of things, you have a few different specific royalty types. You have public performance royalties, you have mechanical royalties, and sync royalties. Most of what we work with is public performance royalties, mostly public performance, although we do a fair amount of publishing royalties as well, which include mechanical. So there are some on the recording side you'll see we do occasionally, but for the most part, again, it is on the composition side. I could go down the copyright road really far and explain all this stuff, but a lot of it's, I just wanted to cover it briefly to give you some orientation toward it. But for the most part, most of our clients on the sell side are songwriters, people who basically have earning royalties from the composition copyright. Often those come from the public performance royalties through ASCAP and BMI, but they also include the mechanical royalties, which they get from the publishers. one of the most common questions we get is, how do you value these things? We have some rules of thumb that we've used, some metrics that we like to focus on. And I just want to talk about those briefly. And there were some questions about it, so we might get more into it later. But the fundamental idea for us in terms of really being able to understand the value of an asset is understanding two key components. One is dollar age, and the second thing is the multiple, the price that you pay for it. So the dollar age essentially is an indicator of the quality of the income stream. Essentially, it's using a very simple rule of thumb. If any of you have read any of Nassim Taleb's work, he talks about the Lindy effect, or the Lindy law. And essentially what that means is the longer something has been around, more likely it's going to be around in the future. So if music has been listened to for a decade, and earning royalties for a decade, it's more likely to be earning royalties a decade into the future than something that's only been earning royalties for, let's say, 1 year or 2 years. So dollar age essentially is essentially how long the music has been earning royalties. It's not exactly when it's released, because we can go through the formula. It's essentially a weighted average of the dollars in the most recent period when that music was released. So the formula essentially we find to be the most useful way to sort of understand how likely the royalties are to continue. The other thing that is LTM, just what exactly did the royalties earn in the last 12 months? And use that essentially, you base a multiple that you're willing to pay based upon the earnings that it's produced in the last 12 months. Okay, on our platform, we have two ways you can buy. The number one way is through the auction house. Sure, most of the transactions that have been conducted on Royalty Exchange have happened through the auction house. It works like eBay. You go in, you create an account, you can watch an auction, which I encourage. If anyone's really interested in music royalties and you haven't bought anything yet, the first thing to do is not go buy something, but to go instead and watch an auction. Watch an auction and look through study exactly the way the market is essentially pricing these things. I mean, one of the great things about an auction platform, honestly, is that is price setting is done there. Price discovery happens there. And so if you want to know what these assets are worth, you should look at how people have paid for them in the past and how the bidding actually works. So the auction house is number one. The second thing is the secondary market. Secondary market is people who have bought through the auction house or other means on our platform in the past. Those assets are listed in the secondary market where the new owner, the new investor, essentially the person who owns the asset currently, can list it in the secondary market, and they can set a buy it now price where you can go in and you can just acquire if you're willing to pay the price that they are asking right now. You're also able to make unsolicited offers to all of those rights holders, to all those investors who now own the asset. So it provides liquidity to people who bought already. And it also, there's a wealth of information there about how these assets have performed post-sale, because you can see what they bought it for and you can see what it's earned so far since that period of time. So this is just a picture of the auction house and some of the auctions that are live right now, or that they aren't live right now. Actually, those are older ones. This one is live right now, though. The Rihanna, one of her most famous songs. I think it's from like a dozen years ago, if I remember right. It's a great asset. Now, this asset is made available over a 10-year term. We have fundamentally two ways that these assets are sold in our marketplace. One is life of rights, and the second one is a 10-year term. There's a third that we've done a few on where it's a 30-year term, but for the most part, a 10-year term or life of rights. What a 10-year term means is that you earn the right to that income for a 10-year period. After the end of that 10 years, it reverts back to the artist. Okay, that's how that works. So essentially, it's like a mortgage bond in that way. So these are the financials that you'll see if you go into the detail of this Rihanna auction. It'll show you exactly when the music was released, exactly what it earns in the last 12 months. What the growth rate over this year versus the prior 12 months is. It breaks it down in terms of how the income is generated, performance, mechanical, sync, et cetera, and shows it essentially how it's performed over time. So with the financials that are available in every single auction and in the secondary market, you can get a good idea of how these assets typically perform, and you can compare one to another. So again, if you're just getting started with this, I encourage you to watch an auction, watch how the other investors are bidding on it, and then also go through the different listings, past listings, and especially in the secondary market, and you can see the current performance of those royalties. Here's a picture of the secondary market. On the secondary market, again, the view of them is different, the display of them is different, but we list a couple of fundamental components of it. Essentially, if they're a term, how much is left in that term, how much if the sellers has a buy it now price, that's that second column. Move further over and you get into the earnings over the last 12 months. After that is the dollar age was listed there in the next column. If you drill down into the details of the secondary market, this is what you see. You're going to see a breakdown of how the asset has performed over time, including you're going to see since it was purchased by the investor in the marketplace before, what they paid for it. So in this case, they paid $25,650 for it, and they have it listed at buy it now for $35,000. So anyway, we can go very long into all of these things and showing how the site works and what Royalty Exchange is about. But I think really want to just really base this conversation on what you guys are curious about, what you need to hear right now. So we have some questions on deck already. You guys have submitted another 4, so please keep those coming in, and then let's go ahead and tackle some of the big ones that came in advance of this.
Great. Thanks, Matt. So I'm gonna go ahead and just read some of them that we got in advance. Basically, when you guys registered, you had the opportunity to leave a few questions. So I think we're going to start with the primary theme of the questions that we saw coming in, which is really related to how music royalties and royalty investing is sort of affected by the current situation the world is in with the coronavirus pandemic. So the first question is, how is coronavirus affecting the UK music industry? We're going to go ahead, I think, maybe and address the broader music industry, not just the UK. So Matt, do you want to take a stab at that first, and we can kind of get both Brian and I can kind of get into the details, but it's kind of a big question. We want to give it a full answer.
Well, we've been trying to get our hands around this because it's not clear completely, but we do have some insights I think we can share with you. The biggest thing is that so far, we haven't seen you don't see any effect in the actual earnings, because the music business payments are delayed substantially from when the royalty, from when the earnings are earned till when they're actually paid out is, in most cases, it's 6 months. So sometimes less, but usually it's about 6 months. So, the royalties that are being paid out now are from collections that occurred in the past. So we aren't seeing that in the actual earnings yet. There are some indications, though, that some of them are going to be affected. The most significant thing we have seen so far, though, is that ASCAP, which is one of the 2 main agencies responsible for collecting and distributing royalties to songwriters, announced about 10 days ago that they were delaying this quarter's payment to songwriters by 3 weeks. We were extremely disappointed in the decision to do that, not just because obviously the investors who have purchased these, their payment is delayed in unexpected 3 weeks, but because it just seems to, in my opinion, my personal opinion, I think it was a violation of the trust that they've developed over a long period of time with songwriters. So I think that was a big mistake, and I think that they regret that the way that they handled it already. But they indicated that payment would be the full amount that it was that they had planned to pay already. That the amount itself is not impaired by the delay, but there is a delay of 3 weeks. They also did indicate in their communication broadly with all the rights holders that they expected that collections would be hurt by COVID-19, specifically because some portion of the royalties or the revenue they generate comes from what they call music users that are in the retail side of things. So if you go into a bar or restaurant and there's music playing, those people have to pay a license fee to ASCAP. Now we've done some digging though, and Anthony can, I think, shed some light on this. What we actually understand about it.
So first of all, this is not something that we kept that really needed to keep that close an eye on before, because it was just something that always happened. It was almost taken for granted, right? So we are doing a little bit more research, and I don't have a full, complete picture to paint just yet. But here's where basically things stand. I think first of all, it's really important to realize that there's the way that the music industry more broadly is collecting and earning revenue, and then there's the way that people that are investing in royalties through Royalty Exchange are earning income, basically. And so I'll focus this primarily on the public performance royalties, which is a large percentage of what investors in royalty exchange are able to acquire, right? And public performance royalties earn from a number of different ways, some of which is music played in bars or music played on stage. And what we did is we went in to look at how much of those two activities contribute to the earnings that investors collect after they acquire royalty on royalty exchange. Now, this doesn't necessarily apply to the music industry overall. This is based on, these are assets that were acquired on royalty exchange. This is us administrating those payments to investors, and we're looking at, okay, from which different sources does this income come? And what we found was basically roughly 1%. As if you acquire a public performance royalty on royalty exchange, roughly 1% of the income that you're collecting is coming from a band playing live on stage. Another roughly 1% is coming from music played in venues and whatnot. And it's all going to kind of somewhat depend on the asset that you actually acquired, but across the board, that's what we discovered. I don't think that's true for all of ASCAP, but it's definitely true for the kinds of assets that you're acquiring on royalty exchange. And then I'll quickly try to answer this question as we can move on. One of the reasons being is that particularly when it comes to things like music played within venues and whatnot, it's done a little bit differently in that the bars and the restaurants, they all pay a general licensing fee that goes to either ASCAP or BMI, and that money is collected into a big pool, and then that pool of money is sort of distributed to artists based not necessarily on what was actually played within that venue, but based on sort of market share. It's not like, so like if I had a venue and I just played one band that entire month in my restaurant, that band is not getting all of my license fees, getting split up amongst many others. So that's why, at least for those assets that are acquired on royalty exchange, so far, it seems like a small percent. But again, it really kind of depends on how this sort of transpires and moves forward. But basically right now, that's kind of how it works. That's sort of a long-winded explanation. We are working on a larger report that we're going to send to all investors that kind of breaks this down in a little bit more detail, when I hope to have that out by the end of the week.
But ultimately, it's still, even that report will be speculation based upon what we understand about, the situation. There's still a lot that is unknown. It will all become more clear as payments come in over time, as we start, as the royalty distributors essentially start paying it out to investors.
But I do want to jump in, since we have a side question here that's coming in through the live Q&A that asks, how do we know if ASCAP is improperly using the funds that are collected?
Yeah, I don't think there's any evidence that they're improperly using any of the funds. So they made a couple of big mistakes in my mind. What they did, number one, is one that they've been aware of for a long time, and that is that they unlike BMI, they work on a cash basis. So they use current cash coming in to pay out liabilities that were owed in the past from the prior quarter. So basically, the way most others do it is they work on an accrual basis. So money earned, essentially, the money earned in the past is what they're paying out today, using cash from the past. So ASCAP's like a quarter ahead, essentially, and so that put them in a temporary cash squeeze because they were using current incoming cash to pay past liabilities. They've known about that for a long time. They always thought it could blow up on them, and so they made this decision last minute. But again, we've been assured by the CEO there that that it's going to be a full payment. So what happens in the next quarter will be interesting. So
and just to elaborate on that, one of the benefits of royalty exchange administering the payments, if there's any payment for a catalog that we see out of the ordinary or kind of out of the pattern that we would expect, it's something that we'll dive into a little deeper and find out why.
Okay. So I want to keep this moving here. We got a lot of questions still we want to answer. And Ryan, since you're already joining the conversation, I want to ask one that kind of is maybe more for you, which is, how is the current downturn reflected in our models?
Yep, great question. At the moment, we haven't really updated the model, and that is just due to the lack of data. Like Matt was saying, the royalty organizations are a little bit behind on payments, and rather than guessing and making estimations, we would rather have real hard data to update the model to reflect it accurately.
All right, great. moving on. How will the pandemic affect valuations in the short term and in the long term?
Well, I'll go first, and Ryan, add anything you have. I think that prices for music catalogs had reached a peak, I think, of this cycle anyway. Especially the larger music catalogs that were purchased outside of Royalty Exchange, people were paying really high multiples for them. And I think it seems like it was the peak of the cycle, and they're now, I expect that they're going to go down as essentially, people's confidence in the market, decrease. So I would expect that some of them, especially on the higher end, these huge catalogs that, are multi-million-dollar catalogs that are purchased, that those multiples will go down just because they got so stretched out. I would expect that in the short to medium term. In the longer term, it's hard to say exactly how this is going to affect things, but I think that one of the things is, and this is just me personally talking, I as somebody who owns some catalogs too, it's just me personally talking. I think that the assets that you can invest in today, and going forward, as far as I can tell, that generate income in the near term, where you make an investment and you start to generate cash from it in a very short period of time. And this, with royalties, it's 3 to 6 months, are so rare, and they become more rare rather than less in this environment. I mean, real estate was one of the places where you could go, for it, in REITs and so forth. And that's gone now. I think that's much under much more distress than music royalties will be. So I think that the multiples should come down a bit. And I think that, but I think that the demand for these kinds of assets over the longer term will probably just continue to grow because income is so scarce.
So a related question here is, since the live entertainment industry has been so affected by the pandemic, is there or would there be a boom in buying music copyrights?
I mean, I don't think well, Ryan, would you like to answer that question?
Yeah, it's hard to tell. Speculation would be a lot of larger funds, companies, that sort of thing are probably kind of taking a step back at the moment to kind of assess the damage being done and where to kind of cut expenditures, specifically buying music copyrights, that sort of thing. So.
Yeah, I will say that I think that a lot of the newer entrants to the space are probably going to be a little bit more wary. People have just started, capital has just been formed to deploy in the space. I think is going to be a little more wary. However, before this call, I was on the phone with GIC, Singapore Sovereign Wealth Fund, and they have been waiting for this moment. What he told me is that they've been de-risking over the last 5 years. They weren't expecting a pandemic, but they were expecting something, and they've been waiting for this moment. So I think that for people who are positioned properly, there will be an opportunity to acquire great assets, and music catalogs are probably one of those asset classes where you will have that eventually. But when there's immediate shocks and you're not sure the way things are gonna pan out, I don't think that most people are not going in, and most of the larger capital is probably not gonna sit on the sidelines for a while.
Okay. And then I guess just, finally along the same lines is a question, will there be any depreciation in the royalty or increase during economic distress? And then kind of a side on to that same question was how to select the correct royalty, which is, we're going to get into more of that in a second.
Well, just to use a stock analogy, I mean, one of the things that why the stock market has been so wild up and down lately, I think, is because it's impossible to forecast the earnings of a lot of these companies, and so it's very difficult to know how they should be priced today. And I think that whether or not if earnings are substantially impaired in any of these public companies, then then there is going to be a reduced share price you would expect. And I think the same is true in royalties. If the royalties are substantially impaired for whatever reason, like especially if you own a royalty stream that's substantially dependent upon live, then you would have to expect that would experience a reduction in multiple. But
okay,
it really depends upon what the income looks like going forward, and we need a little more time to be able to see what that looks like.
Okay, and again, I'm going to keep on going through the questions that we received in advance. We do have some coming in live. We are going to answer every single one of these questions during the course of this call. If we have to go over, we will go over, but we are committed to answering all of these, so please bear with us as we go through them. Thank you for your questions. So the next sort of group of questions that we got in advance were kind of around the valuation, of royalties. And I think a lot of people are kind of looking into that. So I'll start with the first one. How do I ensure that I'm not paying too much and exposing myself to a loss?
Ryan, do you want to?
Yeah, I can jump in. I mean, it's kind of basic with any investment, having some price discipline, which is just something like determining the max price you're willing to pay for an asset before you actually start bidding on it. Don't get caught up in the auction or like the artist or the music. Like when analyzing these royalties, it takes a little bit for me to kind of step back from, if I'm looking at a band or an artist that I'm a fan of, to step back, not take that into consideration, and to just look at the cash flows and, the projections and the forecasting that we're making.
Yeah, I think that's a big, when you do get in a bidding war, if any of you ever participate in any kind of like a charity auction or something like that, you find, sometimes you end up paying for things a lot more than you expected to get caught up in the moment. Certainly that can happen in an auction. So like Ryan says, know what you're willing to pay essentially in advance before you really go into it. I think that's number one. And, number two is, I think, in terms of really exposing yourself to loss, one of the smartest things you can do with any asset is just make sure that your position size is small enough as you're learning about the asset class, so that if it does, if you do overpay, it's not going to have a serious negative effect on your overall portfolio. I mean, I think position size really matters with all things.
So let's dig into, go ahead.
I was going to say, and just in this environment, maybe even minimizing that position size. If you normally invest 10%, do about 5%, just because of the volatile environment we're in right now.
Yeah, just buy yourself 30 or 60 days, in that time period, just to see how things pan out.
So let's get a little deeper into the valuation part, because we have a lot of ways. We have a lot of suggestions on how you can evaluate a royalty stream, basically. So there's a couple of questions here that I'm going to read together that I think have the same answer, which is, what has been your best strategy for choosing an investment, like a personal algorithm? And another one being, when someone's purchasing a music catalog, what should they do? What should they look for? So maybe Ryan, you want to start with that, just in terms of some of the key metrics that we typically tend to point investors to in terms of how they can conduct their analysis.
Yeah. So, I mean, the key metrics that we look at would be dollar age, the kind of the growth in royalties over the last 3 years, and that a meaningful portion of those earnings are coming from streaming. I mean, typically a rule of thumb I use is I look for dollar ages that are 5 or above, that the royalties have grown over the last 3 years, and that streaming makes up, say, 25 to 30% at least of the earning sources.
Yeah, every asset's different. So, you want to look at, you can drill down on each asset, and you can make choices based upon that particular asset. But I have a heuristic I use where I'm willing to buy assets sight unseen, essentially not knowing who the artist is, and not really even knowing, what percentage of it is coming from streaming. And this, again, is just me personally, the standards that I use. This doesn't work for everybody, but it's, to me, it feels fairly conservative. So if we're talking about a 10-year term, okay, then I will pay the dollar age. I'll pay basically the multiple of what the dollar age is. So if something is 1.2 years old, the dollar age is 1.2, I'll pay 1.2 times the last 12 months. If something is 3.5, I'll pay 3.5 times the last 12 months. And I've gone all the way up to 4.5. 4.5 is where I stop. Now, there are certainly, on a 10-year deal, there might be some catalogs that are worth more than 4.5, but I wouldn't want to do it on a sight unseen basis if it goes over 4.5. But if I figure I'm buying a catalog, a portfolio of these things, then that formula on a 10-year term, I feel comfortable with buying basically everything. That's just me personally. On the life of rights,
seen folks go far, just because everyone has their own thing. We've seen 10-year terms go for as large as 9 times, which is interesting. But we see all kinds of things.
I don't understand that, but yeah. Life of rights, though, I will go all the way up, same formula, but all the way up to 8. Sight unseen. I'll pay 8 times the last 12 months if it is 8 years or greater in dollar age. So again, this is the simple heuristic I use if you're acquiring a bunch of them. You know, if I were only going to buy $10,000 worth of these assets, and that's it, then I'd be more selective in that. You know, I'd be more careful. I'd probably be more conservative with it. You know, maybe lower, maybe. And in this environment, I mean, I haven't done this yet in terms of the way that my heuristic, but maybe in this environment, I'll roll my multiple down by a quarter of a year or a half a year, so that again, if something is 3.5 years dollar age, instead of having a willingness to buy at 3.5, I might do 3.25 or 3. I mean, I might adjust my standards to that as I get more information going forward. But today I'm still using that same heuristic. I felt like it's offered me enough protection so far.
All right, and this is a related question that comes in from the live Q&A that I want to quickly bring in, which is in terms of how we present data on our listings, why evaluate royalties on just 12 months to get an accurate NPS, net publisher share? An average of over 4 to 5 years is industry standard.
Yeah, well, actually, 3 years is 3 years NPS is what's most commonly used, and I think that's we have income from we share more income than just the last 12 months. We just we're using that last 12 months when we're talking about multiples. So we show all of the financial data that's available, and you can go and calculate essentially what the NPS would be based upon all of the financial data that is available in that catalog.
Right, but you need one 12-month period to create the actual multiple. Like it has to be limited to one period.
Yeah, and also I'll say the NPS is somewhat risky, because you take the average of the last 3 years and you use a multiple on that. Well, the average of the last 3 years might be 50,000, but the income last year, in the last year was only 25,000, because it's decreasing, it's declining so substantially. So I think that you could get yourself in a lot of trouble essentially by using the average of last 3 years versus using the last 12 months to form your multiple. Ryan, do you have anything else to say on that? You're muted.
Sorry. And that just speaks to why you need to evaluate these catalogs in full. You need to look at all the data. On the listing page, we give the last 3 years and provide some other metrics, but there's also a raw data file which you can download, and it is directly the data we receive from the distributor, and it covers the time period that they're able to give us in full. So you can make your own kind of projections.
Okay.
Exactly.
So another question here is, are there any online tools you would recommend to use when for an investor to do their own due diligence? And it actually reflects a live question here, which is, basically, again, where can we go to find more information, data about the artist, the song, the royalties, that sort of thing?
Yeah. The truth is, at this point, we are the most information-rich source on these assets, which is why I, was speaking with the folks at Singapore Sovereign Wealth Fund today. There isn't like a great repository of research and data on this asset class. So they first reached out to us a couple of years ago, and we have periodic conversations with them where we basically share insights about what we see from different perspectives in the music industry. So unfortunately, there aren't really great tools out there that you can use other than this. Now, there are some tools that will provide information on like the popularity of some artists in Spotify, and what the play information looks like, but that doesn't necessarily, because all of those services, essentially the royalties that actually end up being paid to the rights holder are based upon a number of factors, like again, what percentage of market share, and then what percentage of that royalty is actually owned by the particular seller.
Mm-hmm.
The seller is often a songwriter who has written for multiple artists, and you kind of have to like trace that back to the actual songs that are being played, and try and sort of reverse engineer play counts. So there aren't a lot of other great sources out there, essentially. I think fundamentally, just like you would look when you're trying to evaluate any other investment, looking at the income track record. If I'm looking at a public company, I'd want to know, what's their free cash flow essentially over its entire existence. Looking at the raw data file that is presented in all of these auctions essentially acts as that. It's essentially the historic free cash flow generated by these royalties, and provides detail down to the source of those royalties. So I think that the actual income history is the best source to understand a particular catalog. Ryan, would you have any other thoughts on that?
Yeah, I would agree with that. Again, it just goes back to that raw data file. I mean, there's so much information you can get out of those if you know how to read one properly. And like you said, you just want to look at that earnings history and how reliable it's been in the past, and that'll kind of indicate what you can somewhat expect in the future.
Yeah, you're buying that income. You're buying that income history. That's what you're buying that income stream.
Mm-hmm.
So how it's performed over time is indicative of how it might perform in the future. It doesn't guarantee, of course, its performance in the future, but there are lots of clues. If it performs historically, and the longer the time period you have, again, the older the dollar age is, the more likely that income stream is stable.
Yeah, I mean, and the great part about music royalties is, like Matt said at the beginning, you're at the top of the capital stack, so there's no costs or expenses you have to worry about or forecast. So it makes it relatively a bit easier.
Yeah, one question we get oftentimes is the royalties that are being sold, is it for all of the income that's in the financials? Yes, that's always true. What the royalties that are being sold in any particular auction are for all of the financial information that's shown. Like, it's not like, even though the artist who's selling might only own 1/3 of the royalties for a particular song, the financials that are being shown are for that portion. So you don't have to do any extra math to figure out, well, what's my portion of this? The financials that are shown are on the asset that you're buying.
All right, I'm going to try to juggle between the stuff that came in advance, which is what's coming in live, that's sort of relevant to the current topic. So there was a question that came in live, which relates to what we were just talking about, related to, cut off the top, basically, like why are music royalties paid first than shareholders? If you could just maybe explain that real
well
quick.
They're paid first because essentially, in order to use this intellectual property, they are, the user of it is required to pay a license fee in advance. So like or not in advance, but required to pay a license fee. Now, if you're going to go buy essentially, let's say, if you're going to buy stock in Sony, for instance, okay, which is a publicly traded company, they have an immense music catalog. The royalties that come into Sony are one revenue line. They have a number of expense lines, so, including, capital expenses they have to make, office expenses, staff and salaries, other gambits they might be making in the business, get expensed out, funding new artists. And then what's left over at the bottom of the P&L, is the earnings of that business. There's been a huge amount of dilution of that intellectual property along the way, along those royalties. So instead of essentially buying the public company stock where you're buying more than just the music anyway, you can go all the way to the top essentially and just buy that income stream directly, without any expenses tied to it. I mean, before expenses can be applied to it, essentially before any expenses get applied to it.
So let me just use our common way of putting it. It's like basically getting a penny for every iPhone sold versus a share of Apple stock.
Exactly. I should have said it like that.
You should have.
Should have.
All right. And then real quick, there was a question about, can you please give some additional context on what market multiples are for catalogs of different sizes? By sizes, I'm interpreting that as meaning cost, opening price, for instance. But I could be wrong. And if I am, please ask your question again through the chat. But can you address that a little bit in terms of multiples compared to cost of initial cost of bidding?
You mean how much they go up from after something goes live?
I'm just reading the question. I'm not entirely 100% certain.
Well, I would say that the biggest determinant in how a catalog, its ending multiple in an auction, has to do with its dollar age. Mm-hmm. So the older, the more classic the music, the more reliable the income stream, the higher the multiple. And we've seen things go for as much as 17 times for life of rights stuff. We've seen things go for as much as 17 times. But I would say the average life of rights, which can include things that are really old and including things that are, only a year or two old, is probably somewhere around 6.
Yep. Okay.
And then for the 10-year term, the average, I'm not sure about the current information on this, but I think it's probably around 4, 3.5 to 4. It's somewhere in that range for a 10-year term. And there are some things that if something again is 10 years old, it's going to push up that 4.5 multiple. It's going to be somewhere more on that range. If it's only 2 years old, it's going to be close to these heuristics that I was using with you earlier. It's going to be somewhere probably between 2 and 3 that people would pay for it in terms of a multiple.
And so again, also associated with this, which I think is an important question, it says here, for a lifetime royalty, why would a songwriter give up that income? Is it an indication that they don't think the song will continue to make them money?
I can jump in here. I don't think that's the indication at all. It all has to do with, the time value money, and that money today is worth more than money 10 years from now. And essentially what they're doing is they're just say, they're giving it up for the lifetime, but let's just say 30 years, right? They're pulling that 30 years of income forward today, so that they can reinvest in themselves or diversify, buy a house, many different reasons. So I wouldn't use that as an indication that they don't think it will continue.
Yeah, this is a common thinking error I think people make, which is that if it's good, no one would sell it. People only sell things that are bad, and it's a normal human thinking error, I think. But yeah, there's 2 ways to look at this. Number one is that artists who are trying to generate cash, they are considered by the financial institutions as unemployed. Okay, they don't have a real job. Their income is irregular. They get paid quarterly. Like they can't go and get a loan for a house as easily as you might if you're a software engineer or a senior manager at some firm. They just don't. So they exist sort of outside of the financial system. I mean, they are the I use the the term, they're like the OGs of the gig economy. I mean, so imagine Uber drivers. Like this is essentially what artists are. A lot of times their income is irregular. They don't know, banks don't know what to think of them. So their access to capital, I'm not talking about Rihanna here. Okay, Rihanna's access to capital is as much as I'm sure people give her money, but songwriters for Rihanna, producers for Rihanna, they don't have access to capital in the same way that she does because of this, gig economy sort of thing. So this is a good way for them to get that capital. The other thing is the way that these things are taxed is important. That person, by selling this right income, it's considered a capital gain. So I can take that income over a long period of time if I'm the artist, and I can pay ordinary income on it, or I can sell it one time and take a capital gain, which depending upon how much it is, they might pay no taxes on it. So, it makes it's really the biggest loser in a transaction of between a rights holder and an investor is the taxing authority, because taxation is go ahead.
Yeah, and I just want to throw in one other point in that a song like this one particular song might earn $100,000, $200,000 a year in royalties, but the people that $200,000 is split among a wide variety of people, and one person among that group of people that are collecting the royalties on that song may only be earning about $3,000 a year on that song, depending on the percentage of the royalty that they've been given for their contribution. So while this is a $200,000 a year earning song, one person's only earning maybe $5,000 a year. That's not maybe in context meaningful income for that person. So by selling those 10 or even lifetime royalties up front and get that upfront cash, it's not an indication on the quality or the longevity of the song. It's just maybe more a factor of how much that particular songwriter is earning from that song and what their personal needs are. So
yeah,
that's just
capital today is more valuable to them. Just
right.
The time value money, what Ryan started off with.
Absolutely. All right. Last real quick question here on this one, when it comes to the listings and such, is why are the owner percentages being sold not reflected on the site? This person says, I'd be more inclined to buy 50% of a song than 10%, and I feel this is a crucial metric in evaluating a royalty stream. Why?
I mean, I would love this because it actually has no bearing whatsoever.
Yeah.
If you own 50%, you don't have any extra. It's not like you're a shareholder in it, and now that you have 50%, you have more control over it. These are passive rights, essentially. You're buying passive access to that income. You don't have any managerial rights that increase with the percentage that you own. The income stream does not change whatsoever based upon the percentage that you own. So the reason we don't do it is because there's no way that we can see it being relevant at all to the investment. And yeah, I mean, I'd love to hear actually what someone's curious about that for, because it has no bearing on it whatsoever.
I'm sorry, and there is one more that I think is important to add at this point, which is, how do you weigh the risk of inflation impacting music royalties longer term? Do the cash flows adjust to inflation?
Well, they do, and they do in a lot of ways. I mean, one is that they're with the PRO income. They're longer term licensing agreements that they set up. So, like a PRO sets up a licensing arrangement with a a large broadcasting network, for instance, and those are over a number of years. So those contracts are stable for a period of time, but they do get renegotiated every so often. So there would be an inflation adjustment if it if need be. Another big source of income, of course, is Spotify and the other streaming providers. So theoretically, if inflation drives up, inflation is real, then Spotify and other parties are going to increase the subscription rates, and then that would be reflected for all of the people in the rights holding stack. The other source is advertising. Advertising ultimately fuels radio, and it fuels some portion of streaming. Again, inflation in an environment where there's inflation, advertising rates should go up, and so again, those revenues should adjust to it. So yeah, I would think they would adjust over time.
All right. I got 3 questions here that are kind of related. In advance, there was a couple of folks asking about advice on how to raise money with a group of friends, or syndicating together to combine their investments into one big, more expensive auction and whatnot. And that's related to a live question which came in, which is asking, what is the regulatory framework for this kind of security? And I think that, just to clear everything up, first of all, this is not a security. This is a one-to-one sale of an asset. And that's what allows us to offer the royalties in this, or the sales in this kind of way. If it were a security, if there was some type of format where groups could come together and buy portions of things, then it would be security, and then the regulatory environment would be far different and more restrictive than what we're currently able to provide. So that's why we don't do that. We make things to be a one-to-one sale between parties, and that reduces the regulatory framework that you're asking about, basically.
Yeah, it's asset sales. Essentially, it's like if you bought a single rental property from a single seller, right? That is not a security. Now, if you go and you wanted to set up a REIT or something, or a syndicate of people that are pooling capital to go acquire assets, then it becomes that's one way that you being a security is measured, or one standard by which it's compared against. These are one-to-one sales of assets from the owning party to you. We facilitate it, but we never take title of it or anything. We just, the actual purchase agreement is between the actual current owner, the seller, and the investor buyer.
Okay, so we got about 20 more questions here to kind of run through. So we're definitely going to go over our schedule at any time, which is fine. We like doing this. This kind of looks a little bit back. One question is, I wonder how royalty income trended from 2008 to 2011.
Ryan, do you want to talk about that? Nope, you're muted.
I believe that Anthony has a slide for that one.
That's a good question. I'm going to throw up a slide real quick. We did a little bit of, this isn't like any huge conclusions that can be drawn necessarily just yet, but we did take a look at the average PRO distribution growth percent measured against the per share growth of the S&P 500 and the U.S. aggregate bond ETF growth. And I'm going to show that here. Just give me a second.
Yeah, and just kind of a little detail is, and we ran a correlation analysis among a bunch of different assets. But overall, with the S&P 500, the royalties it's very close to zero correlation with the S&P 500. It's a little bit more correlated with the bond index, but still meaningfully low correlation where it adds diversification to a portfolio. And if we take a look at this slide that Anthony is showing us, one second, I can pull this. Perfect. As we can see, even just looking at those lines, you can see that it's pretty uncorrelated with that. And through 2008, 2009, you can see that the royalties the distributions in the royalties were still growing. They just tended to grow at a slower pace than normal.
Yeah, and let me just jump in. Also, and this is the part that makes it very, very difficult to really make an an apples to apples comparison in that same time frame, while there was their own, we had our own market sort of fluctuations going on at the time in terms of the financial crisis and other things. Completely unrelated to that, the music industry was going through its own transition. It was on the sort of late in the game of transition from physical to digital, but it was also transforming at that time from digital sales to more of a streaming and access model. And so regardless of what was going on in markets in the broader economy, there was this micro transition taking place within the industry in terms of a format change. And that format change had all kinds of ramifications as a result. So I'm going to stop sharing now, but that's also worth noting. So, I think that's the best way we can answer that question right now. We're gonna be looking very closely on some of the correlations that take place within the current environment as well. Okay, sorry, just trying to juggle multiple screens here. Have you seen a change in the mix of who is seeking to monetize their royalties, songwriters versus producers versus performers?
Just briefly, I mean, when we first started, it was a lot of songwriters. Now as our kind of the Royalty Exchange brand and what we do has gotten out there, we've attracted more producers and performers. So over time, that mix has just organically changed. I mean, in the recent period, I mean, definitely we're expecting more of kind of all songwriters, producers, performers to probably want to kind of show some interest in wanting to sell their royalties or see what they can get for them, that sort of thing.
Historically, it's been songwriters, but I think that the popularity of or the sense that it's okay to sell royalties has increased dramatically over the last couple of years in particular. And so I think that now you see people further up, the stack, I guess, from songwriters and producers and some performing artists who have started to express more and more interest.
Okay, rolling through these now. Whatever happened to the FBT M&M Royalty Flow IPO?
Well, there's a long blog post that I would point people to for all the details. But essentially, the regulatory burden was pretty difficult to overcome, and we were using a specific new part of the law that was supposed to, this Reg A plus portion of the law, was supposed to make it easier for smaller entities to go public, and ultimately had a lot of trouble. I mean, that regulatory framework had a lot of trouble. So we were battling with it for a couple of months, and ultimately we just pulled the plug on it, and we flipped the asset to a private equity firm.
Okay, so another question here. This is a great question, actually. Someone who's new to the platform saying that they're having trouble understanding how many of the prices have so many years of potential paybacks. So this pointing to the comedy, the Trading Places auction that we did a while back. It sold for about 12 months. I'm sorry. It sold for 140,000, but the last 12 months royalties were only 8,000. That's a 17+ year payback, even if the cost of money is not considered. I understand these are long-term investments, but the break-even seems to be extremely long. How would we respond?
I mean, just starting on that, Matt's got a great analogy for this in a moment. I mean, you got to take into consideration a lot of things. And now one is this was certainly an outlier, but you have to think about how old this film is and how long it's been generating these royalties for, which certainly is going to cause it to have a premium. Other things, different buyers are willing to pay different amount, and you want to compare other options that are available out there in public markets. I mean, the 12-month yield on the asset using this example is roughly 6%. It's a little bit lower than that. It's hard to get a 6% yield like that elsewhere at this point in time.
Yeah, I think, I mean, one of the ways I was thinking of this is that, it would take you 17 years. Again, now this was an expensive asset. It's one of the most expensive ones on a platform. Essentially, when this asset hit our marketplace, in terms of multiple, when it hit our marketplace, it was picked up by Bloomberg and showed up in everyone's Bloomberg terminal. And so it became this like pissing contest sort of thing.
It went viral.
It went viral. It was so that is an extreme example. But even in that case, as Ryan said, the yield on it is still about 6%, which is almost impossible to get today, even today still. So I think that but you it's not that it just takes 17 years to get your money back. You're getting essentially paid you know, a carrying cost, a holding cost for it of 6% a year, but you could sell that asset. It has underlying value. You know, you can sell it. It doesn't have to take 17 years to get your money back. You're earning 6% a year, and you can put it up for, you could resell it at any point. So you have it's not like, you know, that all you have when you buy it is the income stream. You also own the underlying asset when the life of rights deal.
Great answer. Okay, and then we got a lot of sort of hail of bullets here coming up. So I guess the first one from asked in advance, how do royalties get paid out?
There are authorities who collect the royalties on behalf of the rights holder. Those I say authorities, they could either be a music label or music publisher. They have, or it could be these large non-for-profit organizations like ASCAP and BMI, or there are other ones. There are lots of them internationally too that have the sort of legal authority to collect and distribute these, and responsibility to collect and distribute these royalties on behalf of rights holders. So you don't have to worry about the artist writing you a check every quarter. Essentially, you know, the title essentially gets transferred, fundamentally gets transferred from the seller to the investor, and you start to collect those payments from the authority, from ASCAP or BMI. Now, we are in the middle of that transaction in most cases, meaning we're in the middle of the payment stream. We don't charge anything for that. We do it as a service to the participants in the marketplace to make the transfer easier for both the seller and the investor, and also for these agencies like ASCAP, BMI, who, you know, they aren't set up to service people who aren't artists, you know, and aren't publishers. So having lots of different investor rights holders, calling them, asking them questions, they're just not set up for it. So we act essentially as a buffer in there to make it easier on all parties. And so when we receive payment from ASCAP, our commitment is, or BMI or whoever it is, our commitment is to turn that around, the payment around to the investor within 30 days. We've increased that commitment in the current environment to doing it within 15, and the current number right now is 9. Within 9 days of payment, that's our average payout to investors is within 9 days.
Okay, is there a ceiling or cap on the percent that you can purchase from a catalog?
Well, that is whatever the current owner is willing to sell. So they decide ultimately, they might only own 10% of the catalog themselves, and then they might only be willing to sell half of their 10%, and that's then the natural ceiling. If they chose to sell all of theirs, then that would still only amount to 10% of the total catalog. So we don't have the side. We don't get to decide that. The seller does.
All right. This is one of my favorite questions. Are there more things an individual investor can do to produce the royalties or more royalties in an investment that we bought?
Ryan, do you want to talk about that one?
I mean, so there's not much that you can do. I mean, it's passive investment in nature, and the rights that we're selling give you the right to collect the income, but doesn't really give you the right to make a decision. For example, if you wanted to try to get a song placed in a movie, you would still need approval from other parties that own the copyrights. So this is strictly a passive investment. I wouldn't worry about doing that, and just kind of sit back, collect the income.
Yeah, I mean,
sorry, go ahead.
I would just say it's two-sided. So there's not the opportunity to move the needle on the income. There's also not the obligation to move the needle on the income. So because you're buying a passive interest, it actually, from my point of view personally, it gives me greater confidence in buying it because I know that the person selling it is not instrumental in its ongoing revenue stream. So when they exit their position and owning it, the income is not likely to be hampered because they step out, because they are in a passive role. I'm just stepping into that passive role in their shoes.
Yeah, and that kind of speaks back to what we mentioned earlier, which is that there are a number of different people who all earn royalties, whether it's a particular song or a broader catalog, and they are all financially motivated to continue to have that song earn royalties, and you're just investing alongside them, essentially.
Essentially, yep.
And then there's a sort of a related question is that we wanted to know if they needed to have a publishing company to buy these assets. This person's asking particularly in France, but it's pretty much globally, the answer is no.
No.
Okay, this is a real quick one. Is there any investments one can make with $2,000 of 2,000 US dollars? Generally, the floor is around 5,000. That I mean, we start them at lower than 5,000, but they very rarely. I don't think ever have closed at less than 5,000. I don't know off the top of my head.
It's tough, and honestly, I mean, really, if that's the kind of capital that you're working with, it's probably not the asset class for you. Honestly, it's just, yeah. I mean, even in the lower dollar increments, there's often greater competition, so the multiples get pushed up in those. So, like if you're buying something even under $10,000, you're generally going to pay a higher multiple for it than you would if you're buying something over $10,000, just because there's more competition there.
All right, lot more quick questions here. Will you do you receive any kind of paperwork when purchasing any of the catalogs?
There's the most important thing that you get is there's a purchase agreement between you and the seller that outlines the specific what exactly you're buying and just sets the conditions for that. And that's all standardized. We do it. Every contract is the same. So we've done way more than 800 transactions at this point, and they're all using essentially the same legal framework for it. ASCAP and BMI and these authorities, these distributors, essentially act as the place by which we can clear and transfer title. So they do serve a very important role in de-risking these assets and confirming essentially that the person selling it is in fact earning royalties from it and has the ability to transfer them. So, but the most important thing you receive again is the purchase agreement, the contract between you and the seller.
On average, how many listings per month via auction or secondary market are there?
I'd say auction, it's probably on average, it's probably like 15. Sometimes I think we've seen some months where it's pushing double that, and some months where it's somewhat less than that, but usually 15. Secondary market, there's a bunch of assets listed there, so like that
160.
Yeah, and so like those could change. I mean, you could have 10 change hands today, and you could have or you can have none that change hands today, and it's just dependent upon people going in and looking and finding things that interest them.
And I want to note that one thing we do now weekly, we have a weekly marketplace update that we send out to folks, and you can subscribe to that on our site as well. And that starts out every week. We say, okay, we've had this many auctions go live or close in the last week. We've had this many secondary market transactions, new listings, et cetera, et cetera. So that's going to be monitoring that on a weekly basis if that's of interest. Another question here is explaining the general differences in the two business models between ASCAP and BMI. Matt, I might take a quick stab at that if you like, since I'm kind of in the middle of that. I don't have a complete answer for you just yet, but generally ASCAP works again on a cash accrual basis, whereas I'm sorry, did I get that wrong? I think I said that wrong.
Cash basis.
Yeah, cash basis vocabularies. So basically, the way that ASCAP works is that they take the money and they pay it out relatively sooner than say BMI, who would collect all the money, account for it, and then pay it out later. Everyone still gets paid on generally the same time frame. It's just that what are you getting paid for? What activity are you getting paid is a little bit different. That's generally the difference. Other than that, they operate pretty much the same. It's just a matter of how they account and pay. And that we may see more change to that in response to all of this. That's something I'm looking forward to seeing what happens. So hope that answers your question. But again, there is going to be a broader communication on this later this week as we compile that report. Question here. I noticed some catalogs from foreign markets. Are you looking to increase and expand royalty opportunities in foreign markets?
Always, we're looking for that. I mean, the key thing is that within these foreign markets, there are PROs like an ASCAP or BMI. They call them often CMOs, who collect the royalties and distribute them to rights holders. So the key thing is that at that we want to work with artists in foreign markets essentially through their PRO or CMOs. Like we worked with PRS, for instance.
PRS for music in the UK.
Yeah, and they function just pretty much exactly like ASCAP or BMI, and they're there's no problem. Now, if it's U.S. based music, meaning it's the artists are U.S. based, a significant portion of the income already is internationally driven. You can look at actually the breakdown within the catalogs that are in auction in the secondary market, and you'll see that they do have exposure when they get licensed and used internationally. That money ultimately filters back through the local PROs or publishers and paid out that way.
Okay, let's see here. If I buy a catalog, can I become a member of BMI, etc.?
you basically have to become a member of BMI as part of this process if we are not admitting it. But
if we are not admitting it.
But you have to pay a fee. I think it's $500 to get set up, or it's something I don't recall exactly what it is. Something like that, a one-time thing to get set up as a member. But through us, essentially, we keep that, we reduce that cost for people, and we try and reduce all the friction in the transactions for people. So you're not obligated to become. In fact, we would encourage you not to be, but instead just let us be in the middle of that to make sure that we can monitor payments for you. And also, if you want ever liquidity, you want to ever make these assets available, it's very difficult to do if we hadn't historically been administrating it.
All right. So another question. Matt had talked about high-level valuations for music, i.e. based on a sight unseen basis. Can all music be valued purely on financials, or does knowing something about the artist impact the valuation?
I mean, for this, I mean, with younger catalogs, you might get a bit of an edge. I'd say the big like Sony, the Universal, they spend a lot of money on what's called A&R reps, and that's kind of their job to do that. That's a hard game to play. I'd discourage you kind of from doing that. The financial information is the best way to make decisions on the artist as an investor and as someone that's not a professional A&R rep like that. That's kind of use the financial information is going to be the best option.
That's my view. I'll tell you that we had a lot of pushback from everybody in the music business about this idea that you could value a catalog without being a music connoisseur, of some kind, that you basically would be impaired unless you had specialized knowledge. And we just don't see that that's the case based upon all the transactions that we've seen, all the catalogs we've seen. We think that within a certain range, you can use the key data points alone to make decisions. When I describe to you that heuristic by which I would buy catalogs, that is the heuristic by which I bought catalogs. I have not bought catalogs myself, outside of a couple of situations where I was really paying attention to the artist. I mean, a lot of times I don't know the artist actually. Like I'm not, demographically, I'm part of it is I'm pigeonholed. Like I'm very familiar with a certain subset of music, and there's a whole bunch of new music that I don't know. I mean, stuff that's come out in the last 10 years that I don't know, and stuff that's, from the generation before me that I might not know. So if I were to limit it to my own knowledge of music, I think I would be hamstrung. I would never be able to buy anything.
Yeah, and I mean, that's also how you get caught up in overpaying for auctions. You think you know more about these artists than everyone else, and you're like, I'll bid a little bit higher, and I'll bid a little bit higher, and get yourself into a bad position.
Yeah, now if you want to buy it for novelty, I get it. That's cool. Like you want to own something because you just want to own it because it's cool. That was the Wall Street guys in Trading Places. They just wanted to own it.
Let's see. Got a couple more questions here. For catalog for Royalty Exchange provides projections. Have you gone back and assessed the actual results versus the projected results?
That's a great question. So what we provide is we provide a not an actual projection of what we think that income will be. What instead we're doing is we have a specific formula that is applied as a standard to every catalog that's listed. And that basically kind of uses the same set of assumptions and extrapolates forward what that revenue would look like if those assumptions are true. Now, the reason what it's there for is it's there for you to be able to compare one asset with another. Knowing that their forecast models essentially is the exact same, very simplistic model that's projecting these things forward. And I mean, we spell out the details of exactly what that model is on the website so you can see it, because the idea is that you could download the raw data and you could do your own model. We're just trying to use it so you can compare and contrast one asset over another.
Yeah, and again, it's for comparing and contrasting. I highly recommend everyone looking to buy royalties does their own analysis and come up with their own projections or their own way of thinking about it.
Okay, this next question goes a little bit back to the paperwork, but it's a broader question, I think. As a buyer, what do I get physically when I make a purchase? How do I know the seller actually owns the rights to the music that I'm buying?
The key thing with this, I mentioned this before, that ASCAP, BMI, the publishers, they essentially act as a storehouse for clearing and transferring title. They have a history of paying to this party, to this individual, the income related to these specific assets. So they have on record essentially that this person is the person that owns it, and then has the authority to then transfer it to someone else. ASCAP and BMI and the publishers will not accept essentially a transfer request from a party that does not have the authority to transfer that. So just the nature of the way that the royalties are collected and distributed. I mean, when you're working with independents, it's different, right? If you're working with like really like small players, it can definitely be different. But when you're working with ASCAP, BMI, you know, any of the major publishers that are out there, you know, they aren't going to take some, if they're paying some rights holder money, they aren't going to start arbitrarily paying those royalties to another party unless, you know, the person asking them to has the legal authority to make the request.
Would it be fair to say that the purchase agreement is sort of the legal paperwork that a buyer might need to enforce their ownership of that royalty stream?
Definitely. But,
Okay.
but before we close out the transaction, we get confirmation that that royalty stream is transferred from the current owner and redirected to the new owner. So before there's a settlement of the transaction where we pay the seller, you know, we essentially hold the funds for the transaction until we have confirmation from these authorities that you know that the transfer has gone through. And we also investigate all of it in advance to make sure that it will, but we still withhold until we get confirmation.
Yeah. And just to be clear, that what we do basically is like you mentioned, we ensure that if someone comes up saying they want to sell a royalty stream, we look at what is the entity that is actually collecting and distributing that royalty stream and confirm with that entity that this person is in fact the owner who's been collecting that stream previously.
And we also ensure that it's not encumbered with, there's no liens on it. So it's,
exactly.
we do a basic asset encumbrance check first.
Right. So those are things that we do. And this sort of is related to another question here, which we get all the time, which is what happens to the income streams if royalty exchange is no longer in operation?
Well, within the contract with us to collect and pass along those royalties to you, there is a mechanism by which, you know, if royalty change were to cease to exist for whatever reason, that you can continue to collect that. So it's part of, there is a mechanism set up for it to ensure it would happen. They can be, certainly the funds could be ultimately directed directly to you, or you could have a different, you could assign a different administrator to take on that duty on your behalf. The main reason that we put ourselves in the middle is not to increase the risk, but to decrease the friction involved in the process for people. And that's why we don't charge anything for it. We don't, and we put every effort into turning those payments around literally as fast as they can possibly be done.
Well, just to be clear, sorry, when you say we don't charge for it, there is a, I believe it's a 1% buyer's fee
for the transaction. But I mean, the ongoing administration,
right,
the collection of the royalties and turning around the payments, there's no charge for that. There's no charge
on an ongoing. So it's a one-time payment, and then that's
for the transaction.
I just want to be clear with everyone here.
But the fee for the transaction would exist whether we were administering the royalty or not. It has nothing to do with that. That's just the fee we collect as part of the transaction.
Okay. So another question: how is underwriting or gathering due diligence different for a production music catalog?
Well, a lot of production music catalogs we don't work with at all, and the reason for that is because they don't behave like commercial music catalogs. So, for instance, a lot of the production music catalogs are, you know, consist of like a series of cues or sound effects so that they get put into, you know, television shows. So for instance, there are a lot of high earning production catalogs that earn a lot of money that are a set of, you know, like Kim Kardashian leaving the Mercedes and walking into Louis Vuitton, that little bit of music, whatever, that jingle that's played in that time period. You know, and having a whole bunch of those does generate substantial income. But what you find is that for most of the rights holders that are producing music like that, they don't last very long. So that you know, that first time that episode is played of the Kardashians, it generates a lot of royalties, but it doesn't have that same ongoing organic need because people aren't seeking out that music to listen to. It's just kind of goes along with the deal, essentially. And, so they don't, basically the royalties decay totally differently. The income stream decays fundamentally differently than what you see with the commercial music catalogs.
Okay. Couple other quick questions. Is it possible to own these rights via an LLC, or do they need to be personally owned?
You can own them in any legal entity. That's not a problem.
All right. Just a few quick things here. Okay, here's one. What are some of the incentives that singers may have, songwriters, I'm guessing he means, both positive and negative to sell? Well, we addressed that a little bit earlier, but some people came in late, so I think it's worth addressing.
So certainly, when they sell, the way it might be taxed, it can be taxed fundamentally differently. It can go from ordinary income to a capital gain. That's one reason why they would sell. A reason why they wouldn't sell is because, at least before, this has changed a lot since we've been around. But it was considered bad form, essentially, to sell royalties. It was with the advice of the industry, essentially, was never sell your royalties. So it could be considered a bad thing to do, to sell your royalties. So, and that certainly dissuaded people for a long time from even considering it. But that's changed a lot. Other incentive would be that, as Ryan mentioned, the time value of money is a real key part of this. Again, these are kind of they don't have access to regular financing in the way that a lot of people would. So the capital today can make a huge difference. We've had artists who, raise a little money, and get a home studio put together so that they can produce more music, essentially, and they can increase their income over time. The right amount of capital at the right time injected in anyone's life, and this is true of the artists too, can really make a huge difference in their trajectory. So that's one of the biggest reasons. Yeah, the downside is the legacy value of it, for them personally. They might want it forever. It can have sentimental value for people.
I was going to say another reason they might sell, and this is kind of being full and fair, and this would be, and why the dollar age is so important, is that when a song first comes out, a lot of the royalties are earned in that first, say, 2 years, let's say. If they sell kind of at a peak there, it's something investors need to be aware about. But an artist is looking to, say, capture more of the value, that might start to decay away pretty significantly after, which is why that dollar age metric we list is so important for you to kind of pay attention to and use in your analysis.
Yeah. That's a great way to think about it. Most of the money over 20 years, let's say, I'm pulling these numbers out of my head. I can get real data on it, but just roughly, the amount of money that a hit song will earn over 20 years, it's going to earn, in most cases, 50% of that in the first 3 years, And after that, it kind of levels off, and then it just is now it can be at this lower plateau. Now, it could get synced in some television show or some film, and it could drive new popularity and new income. But it's like the significant radio play that comes out, and the new release of the music, where it's going to earn most of what it's going to earn. And then you can have this release peak, and then it drops off. And that's why I'm willing so much more to pay for music that is 5 years and older, because it's at essentially a much more stable place in terms of its income. It's way outside of that release cycle. You're way insulated from that. And, the income has not just dropped, but it's growing at this point.
You've found your niche market. You found people that are going to listen to you consistently on Spotify, that sort of thing.
Okay, last few questions here are pretty simple. One is just I think someone came on late, just to repeat the time delay between when the published distribution date from the PRO to the date which the investor received proceeds through royalty exchange. Originally it was 30. We've committed to reducing that to 15. And the last distribution anyway, we were able to get it down to as low as 9. So that's the answer to that. There was a question about, do you plan on expanding the offerings of non-music catalogs? We already have. We do it, I would say, Matt, tell me if I'm wrong, but I think it's more as they come up. We don't, if they come up and it's possible to do, but we've done movie royalties, as we mentioned, with the Trading Places. We've done some trademark royalty things, some books, exactly.
So, I mean, if somebody has a solid royalty stream on some really interesting sort of related intellectual property, like again, film, TV, books, other media like that, we definitely look at it, and we'll put it on our platform if we can sufficiently de-risk it to the same degree, that we are able to deal with the music royalties, meaning that counterparty risk is substantially reduced and that kind of thing, and the income stream has some reliability.
Okay, and then there's two last questions that I'm going to switch to sharing a screen here, if I can do this without screwing anything up too badly. But the first one is can you share some kind of a PDF or sheet where investors can learn more about best practices when it comes to investing, such as the information you need to know? And so I'm going to switch real quickly to where you could find some of that on our site right now.
Yeah, I was going to say our website offers a wealth of information on everything you could possibly want to know, and where to find out more if needed.
Exactly. So I'm sharing my screen right now. This is actually the blog. If you see the red underneath the blog sign here, the blog has a number of things that I will personally take responsibility for. Probably need to organize a little bit better, but there is here an investor resources section that you can go to. And once you're there, there are a number of different things that you can kind of get into. There's some news that talks about sort of the current reality. There's some results that we have as well. And you can kind of get into an area we call investor guides. Investor guides look at, music royalty guide. They kind of breaks all of that down. Here's some guides about how you could do some valuation. What does dollar age mean? Different types of royalties, specifically drill down into each one of those, how to read our listings. All of this stuff is here and available to you. And then there is one really interesting one that I'll point out here called the Ultimate Guide to Buying Music Royalties, which you can download. You have to kind of enter some information in order to get it.
Which I want to say, we haven't updated that in 3.5 years.
Which we are going to soon, yeah. Right? But in the meantime, there are nuggets in there that are still very much worth looking at, yeah. Right? So there's that one, and then that's the answer to that question. Yes, there's a lot there. I'll be adding a lot more, and if there's anything that we don't have that you need to know, please let us know. I'll be more than happy to create all the content in the world that you guys need to access these things.
Well, that's a big part of these sessions too. I just want to say a big part of these sessions is to try and, once you know enough to be able to formulate the questions that you have, ask specific questions, we're happy to answer them. I mean, this was all kept pretty high level, all these questions so far, but, we can talk through, some of the raw financials in something. So if someone has a specific question about that for a future session, Ryan mentioned earlier, there's a lot of information if you know what you're looking at within those raw files, and we can walk through one of those if that's what people would like to do.
Absolutely, absolutely. And the final question was from someone who says he's really interested in getting started, but was wondering, do I need to be an all access member to get started? I think the answer to that, you don't need to be.
There are some, obviously we have the all access investor membership for a reason. And the primary reason we have it is because there are people who want access to a couple of features that not everyone needs, and certainly want access to more information about our analysis of these assets. And they get that through the all access membership. And, we publish monthly insights, that certainly, for instance, like how these things are taxed, and lots of information that can be really useful to people who are at a high level of engagement with these sorts of assets. Again, it's not necessary, but if you're really serious about these assets, it can make a lot of sense. The other thing is that there is a couple of key features that you get as an all access member that you don't get if you're not. One of those is the ability to have standing orders. And when you have standing orders, essentially you can say, I'm interested in, I described to you, I would buy catalogs using this heuristic of, a multiple of dollar age. And I described the 10-year and I described the life of rights. So I can have an open order for catalogs that meet that standard. And when catalogs, so there's another way that assets get on the platform that don't go through auction. It's essentially through this automated tool that we have that artists can connect their catalogs to, kind of like a mint.com sort of thing. They can connect their catalog to our financial tool. It'll give them some analysis on their catalog, and then it presents them with the best offer for their catalog that exists in that moment based upon standing orders that were placed by all access members. So the criteria I use that's purely financial driven, that's not based upon any view of a particular catalog, like not I don't know who the artist is or anything. I can place standing orders, and when artists come in, they connect it and they see offers, they can accept them, and those transactions essentially get automatically closed, and you avoid them going to auction. It's the advantage for the seller is that the time is much reduced. The simplicity of the transaction and the risk for the transaction is much reduced because they know what it's going to go for immediately. And again, it's based upon these standing orders that all access members have. So you get to do that if you're an all access member. The other thing is in the secondary market, the heuristic that I described to you about the way that what I would buy, and this is again, me personally, what I would buy these assets for and do buy them for is actually calculated for you. So there's a column called RX recommends that's visible to for all access members that basically takes the formula that I articulated. So it's you have it. I told you what it is already, but it takes that formula and it makes adjustments based upon the term that's left in that catalog that's available in the secondary market. So that calculation is sort of cumbersome to come up with automatically, but that RX recommends reflects my personal current heuristic where I would be happy to buy anything. And as that gets updated, as I adjust, if I feel like based upon market conditions, I need to reduce the multiple by a quarter of a year or something like that, then that would then be reflected within RX recommends.
Right.
So it's easier to place orders when you have that as a benchmark.
And just to be clear, I think we've updated that. It's now called the analyst benchmark.
Analyst benchmark, okay.
Not RX recommends. So, all right, we're pretty much done here. The last couple of tracking questions was whether there's any special procedures if the buyer is outside the United States. I believe it's not. I think
it'd just be a tax thing.
So there's
talk
that.
to a tax advisor.
And then there's a question about what percentage of deals are closed in this, standing order environment that you just described, Matt, versus.
It was 10% of our transaction volume last year was in that market.
Okay, great.
10%.
So with that, I'm going to end the session here. Thank you all for joining us today. I hope you guys found it very useful. We will be sharing a recording of this entire webinar with everyone in case you came in late. We are going to hold these on a weekly basis for the time being as demand dictates, so we can answer the questions you guys may have. And we're going to be creating additional opportunities for you to interact with us, as well as evergreen content that you guys can all have and share. And we're always open to ideas on what we can create that will make your lives easier in working with us. So
I just want to say also,
Matt, any closing words?
Just feedback. If there's anything that if this is our first attempt at doing something like this, if there's any way that if you have thoughts about the way that we could do it that make it more useful for you and potentially for other users of the platform, let us know. We're totally open. We're doing this for your benefit. And if it could be improved for your benefit, we're happy to do it.
All right, great. Well, thank you very much, all. And again,
Thank you.
look for an email. And we are really happy to be doing these things. So thanks very much.
Thanks, guys.
Thanks.